Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at two assets. We're looking at US oil, which is the CFDs on WTI, West Texas Intermediate, and we're also going to be looking at the 20-year US Treasury ETF TLT. So without further ado, let's get into the Elliott wave count. We've got two Elliott wave counts to look for each. We're starting with oil, and we're on the daily time frame here on the bullish count. They are both bullish long term. It's just one is more bullish in the short term, and one is more bearish in the short term. So, quick reminder of where I think we are on the broader time frame. We've done a wave 1 off of the zero low into a new cyclical bull market, primary degree 1, 2. I think we've now done a 3, 4, and I think we're now in the fifth of cycle wave 1. An alternate count for this would be that this is cycle wave 1 complete, this is cycle wave 2, and this huge move in the primary 3 is actually a primary 1, this is a primary 2, and now we're into the primary 3 of cycle degree 3, the 3, the 3. So I have got this as an alternate. I haven't really fleshed it out yet. I still prefer the idea that this is a single 5-wave move off of the low to find the first cycle wave. If this count is correct, then the primary 3 is shorter than the 1, which will place an upper limit of the 5, which is still a long way off, because even though the 3 is shorter than the 1 did have the privilege of starting at 0. And therefore the 3 is still an exceptionally, powerful move. It's just obviously next to starting from 0, it's not as significant as the 1. So it doesn't have to be the longest impulse wave, it just can't be the shortest. So there will be an upper limit on 5. It's still a long way to go yet, though. We will pop that on a rough idea of that on the chart now, just as a reference. So we know that 5 can't now go beyond the length of our 3, so if we see it's all the way up there at $88, so if this count is correct, the 5 will come in before we reach $88. So we're just going to lock that in place. Okay, so as you can see, we're still a long way off. Oh, well, I didn't mean to delete that. There we go, we're still a long way off our upper limit. Right, so let's come into the smaller time frame here and have a look and see what we can see. So let's bring up our favorites bar, and we're just going to zoom in to everything from the bottom of primary wave 4. Okay, we're going to come down to the hourly time frame. Right, excuse me. So I think we ended up with a diagonal into our wave 1, a flat pattern into our wave 2, and then now I think we're going to have a zigzag as an alternation for our wave 4. So flat pattern here in the 2, looking for a zigzag here in the wave 4. I do believe we've started the wave 4 retracement because we came exactly to the 1.618 target of wave 1 to find 3. We're at 76.9. So if we just show you that, here's the fib extension tool, pick out the start of our wave 1, top of our wave down 1, down to our wave 2, and there it is, 1.618, 76.837 actually this makes it, but it's just a little price marker a bit. These are not particularly precise, they're just rough price targets so that you can see them on the screen easier than having to look to the right hand side. So as you can see, we came straight to the 1.618, which is the extension target for a wave 3. We do see an extension here within the 3, and we can pick out a sub-wave extension within the 3 of the 3. So yeah, a viable wave 3 completed. If this is the counterpart wave 2, we can see that we've likely got either a completed zigzag already, or we've done an A into a B into a C. Otherwise the only way we could count this would be as a 1, 2 into the 5. So let's just run through those options for a moment. So the first thing we want to do is we want to see if we've got some kind of parity here for a wave 4. So down to this low here, up to this high here, we get an absolutely perfect 100% tick to tick A equals C ratio. So this is potentially a very short and violent 3, 4, or wave 4, sorry, and this is now 1, 2, 3, 4, 5, wave 1 into a 2, off into a 3 higher. The alternate would be a deeper retracement. Let's just see what we actually retraced. up to here. So we came to the 38.2 of wave 3 to find our 4. Now that's absolutely spot on as well, that is. We came to the 38.2. The 50 is down here. I don't know why I've got this line marked in green. This should probably be blue to signify, if I know in my own mind, I was probably laying that down as a target for a wave 4. This white line here is the top of our wave 1, so this is our wave 4 invalidation. So 1-to-1 ratio and a 38.2 hit. So let's just put the 4 here for the minute and say, you know, we had a more time consuming flat pattern than 2, very sudden and violent pattern in the wave 4, and a zigzag, nice alternation between 2 and 4. So this should likely be a 1-2 moving up very easily. If we take out the low here for our 4 at 70.772, let's just put a price marker there. Here 70.799 this comes up as, but essentially if we break this proposed wave 4 low, then the count will likely be this instead, A, B and a C to come lower, and then that would be our 4. So we've got a really simple invalidation point here and a really simple long trade if you want it, which is counting this as a 1, this is a 2, off we go in the 3, and this low here beyond, just below the 4 at 70.799, this would be a stop. So you've got a really tight margin of error here, you've got a really tight stop. Let's just see how tight. We're from a current price, I don't know if it goes up or down from here, less than 2% currently from the current price, but you could wait for an up move and a reaction down, so which is 5 waves up on a smaller time frame, 3 waves back, then a little reaction, 1, 2, then enter the trade with a higher stop placed on the completion of the wave 2 on the smaller time frame. That's what we call our STS standard trade setup. It can be played on the 1 second chart all the way up to the 1 year chart. You'll be able to find that same pattern, that 5 forward, 3 back, reaction, 5 down, 3 back, reaction. You'll see it everywhere. So yeah, so we've either done zigzag into a 4 complete, or we've done an A looking for a B looking for a C. Nice and simple to know, because if we transgress the low of a 4 from here, then it's more likely that we're looking at a more long-winded zigzag with an A, B and a C, and there would have to be 5 waves in here. And I think you've got 2 ways of counting that. You can either look at this is a 1, this is a 2, this is a 3, this is a 4, this is a 5, so A, B, and then you'd be looking for 5 waves here in the C. You could even argue that this tiny bump here is a 1, 2, this is a 3, 4, and this is a 5. 1, 2, 3, 4, 5. It does look like it divides better as a 3 wave move than a 5 wave move, so that's why, and with the 1-to-1 parity and the 38.2 target, I'd be more comfortable considering it complete here. Does seem very short-winded, but this was quite long-winded, so alternation in time, alternation in form, we like to see that in Elliott wave wherever we're looking. So that's the bull count. So we've likely bottomed in a 4, we've done a 1, we've done a 2, or this is an ABC. So either way, in the short term, we've got this low to keep an eye on. If we break that, we'll go lower to find the C. If we stay above it and continue to impulse, then we are going to take oil up to new highs to find our intermediate 5 of our primary 5 of what I'm proposing to be the cycle 1. This should all come in before the target, which is a cut off for the length of wave 5, which is around 88 bucks. Okay, so that's the more recent, the shorter term bullish count on oil. Let's come over and have a look at the more bearish one. The more bearish one is that we have a much longer winded 3-4, which is a big expanding flat pattern. So if we just bring up the primary count, on our other bullish count, we are saying this was the 3, and we went 3 A, B, 5 waves down in a C, and this was an expanding flat 3-4, which is quite small in comparison to the primary wave 2. However, the proposal here for primary wave 4 would actually be gigantic in time wise next to our primary wave 2, but we would still have the alternation. So we've got the zigzag here, A, B, C, 5, 3, 5, and this would be a big expanding flat pattern here. So relatively, this would be longer, this would be shorter in time frame, this would be a zigzag, this would be a flat. So alternation in both time and form, again something we like to always look for in Elliott wave. So still a possibility. If we come up and have a look at the target up here. These are 1.618 extensions for wave B from A. I think the upper one is in log. I can't remember. I think it is, because that's where I put the writing. Let's just say yes. So we're in linear at the moment. We can see that this is the lower bound 1618. The higher yellow line is the 1618 in log. So we've come into a golden ratio area. We haven't respected it to the tick. We've peeked through it, so less confluence than there is in the bullish count, where we came exactly to target, the shorter term bullish count I'm talking about that we just looked at. But it's close enough to be considered. Now, from here we have to dig out a 5-wave structure here. We don't have a choice in that matter. We said that there's a 1, 2, 3, 4, 5 pattern here. Probably it does seem to divide better as a 3-wave structure though, but it is possible. So very, very simply, this is a 1, this is a 2. We are going to form another 1, 2, then a 3, 4, 5, 3, 4, 5, 4. As we work our way down, oops, a daisy. I'm still producing the Elliott wave count, aren't I? So let's just go 1, 2. This would be 1, 2, 3, 4, 5, 3, 4, 5, like that. And this would be into the C, into the primary 4, expanding flat completed, and then off to new highs. So this would have oil correct extra, for quite a long time, probably quite violently if this carries on. Arguments for this count would be possible relationship to the stock markets potentially going into a similar wave 4 correction. We've got a primary 3 looking to have completed or soon to complete in the stock market, which would result in a primary wave 4 correction. So perhaps the C leg of oil could link up with the primary 4 correction in the stock market, maybe. Excuse me. So, but yeah, I think you don't want to end up doing that too much, looking at comparing assets and hoping one tells you what the other is doing. Things often do link up, but sometimes it's a case more in the general move, and any direct relationship in count tends to be within the same asset class. If you're looking at the 3 US indices, they've all been bullish, they've all been going up, they've all been doing roughly the same thing. The exception of the smaller caps in the Russell, which we will probably get a video out maybe this weekend on, which still hasn't made a new high for much. But I digress. Let's get back to this oil count. So A, B came to the 1.618, so potential targets for the wave C. Come down to the A, come up to where the B completed. We have a 1.618 here, which would still result in what we call a running flat at this point. Even though it's an expanding flat target, the 1.618 would complete before the A. The C would complete before the A, so therefore we'd actually end up with a running flat pattern. If we wanted to push the expansion into an expanding, a full expanding flat going lower than the A, then the 2.618 down here would be the next likely fib target, which is all the way back at 48 bucks. So that would be a real big flush down. Still a long way from invalidating the count, which is all the way down here at 43.734. So let's just say primary wave 4 invalidation. All the way down here, and we'll just be really picky with this ray, and we'll put the magnet on it. I'll zoom in a bit so you can see what we're doing, and we'll even go so far as to change the color to white, which is our typical default line for invalidations. I tend to use white color coded for the fib levels, because then I can look at it and immediately know which fib level it relates to on my fib tool. Let's try and get ourselves back in order here. Miles away. Zoom back in on this lot here. Yeah, so they're the targets for a wave 4. Now, really simply, if we make a new high, let's pick out another rate. If we make a new high, then this count's invalid, because we've had our chance to go 1, 2, 3. I mean, maybe you could argue the B would push higher and this is some kind of corrective move, but I think beyond the 1.618 you're really starting to take liberties with the idea of expanding B. There's no hard limit on it in Elliott wave rules, but the 1.618 is a likely target. The 123.6 is probably more likely, and that comes before it. So I think you are starting to stretch it. So we won't call it invalidation, we'll just put a white line up here. We want to keep an eye on this. If we come back above this high, this is highly unlikely to, well, this exact interpretation of 5 ways having began down and see, this is completely wrong at that point, but the idea that we could still move lower is viable, just a lot less viable at that point. So if I had to choose, I would call this my alternate count, I would call this my primary count. There's just such a nice relationship to find the way free here. There's such a nice relationship in this zigzag, and there's such a nice relationship in terms of overall retracement. So I'm leaning into this one, but they're both still viable. So let's leave oil there, and let's come over to do our Elliott wave count on the TLT. So I've been bitching about this for months, about how I just can't get an interpretive bullish count off the low. I went back and watched one of my own videos, which I think I should do more often, going all the way back to April, where I suggested a bullish possibility to this, and since forgot it because I disliked it so intensely. And I'm, we try not to be biased, but if we look for a count and we don't like the wave relationship, you should always go with the more viable, and you should always go with the simpler count first. Now, that was fine when I did that idea and disliked it, but the thing is, since then it hasn't got much clearer or any easier to interpret in a corrective manner. So I've come back and decided to at least include it. We'll go and have a look at that in a moment, but here's the one we've been following for a while, which is we've got some kind of WXY. This has been bugging me the whole time. We are channeling. It is very tempting to say 3, 3, 5 A, B, C, but the depth of the B wave relative to the A is far too shallow in my opinion to count this as a regular flat pattern. We don't even come to the 78.6. We'd like to see 90% retracement of the A, or what we say is 89% as it's a fib number. We'd like to see a retracement of that before we would call this a 5 wave in a C. This is a 3 in an A, this is a 3 in a B, 5 in a C. So on that basis we've ended up labelling WXY, looking for 1, 2, 3, 4, 5 into an A, 1, 2, 3 into a zigzag into a B, and then 1, 2, 3, 4, maybe it's 3, 4, 5 here, and now we've finished into a C is what I'm suggesting. Or there's something else going on. We've got too much of an overlap here to consider that a 3, 4. So we've either topped here and this count is correct, and we're going to start breaking down. Bond prices just continue to climb, and interest rates and the yields on the bonds continue to drop. Considering inflation, considering inflation fears and the increasing inflation year-over-year numbers, this seems to be a little perplexing, especially given the strength in the dollar. So the dollar is anticipating, one would argue, higher yields, higher interest rates, as it is strengthening under the fears of inflation and the likelihood that the Fed will have to respond by raising rates to curb inflation. And yet the longer term curve here in bonds, the 20-year out to the 30-year, doesn't seem to be anticipating the same thing, which is a little contradictory. But it could just be complacency, just broad complacency that the Fed are never going to ever pull away the punch bowl under any circumstances. You should be going all in on the inflation trade, perhaps. But if that was the case, we should see. You see what I mean? There's contradictions all over this. So you should see high yields coming into the appearing because of the fear of inflation. But see, this is a problem with fundamentals. We could go back and forth on this all day. You go back and forth on this all day. A lot of things are not making sense. Bond market, equity market, relationships don't seem to be making sense currently. So that's the interpretation, which we are still in a primary, an intermediate wave 4 completed, looking for a flush down in a 5 to find a C. No idea how deep this could go. We'd have to wait and see if it actually continues to move down. So let's come over and have a look at my bullish interpretation that I've put together. We've had to rejig quite a few things here to get this to complete. Now the C to A parity, here's the C, that I've had to move across from our proposed wave 5 position across to here where our new wave 5 is. Rather than this being a 3-4, this is now a completed count here in the 5, and we do get C to A parity to the tick, 100% ratio in log scale, from the A all the way back here to the B all the way to here, all the way down to our C down here. We get this leading diagonal here in a 1, 2. We get a 1, 2, 3, 4. 3 is longer than the 1, but way shorter than the minor 5. Get this extension that builds within the 3 intermediate, but it's the 5th wave. Sorry, this needs to move over here. 5th wave of the 3rd intermediate that has the true extension in it. Where we go 1, 2. I mean, is this a 1, 2, 1, 2, 3, 4, 3, 4, 5, 5, 3, 4? You know, I've got issues with this though. You know, I think that might be a better position to finish it. This is a 3. This is an A. So this is an A. This is a B. This is a C. We get an expansive 4. Or is this a triangle 4? You know, like I honestly have just slapped this together recently, just trying to find some kind of bullish alternative. Maybe it's a triangle. Either way, I need to spend more time figuring this out, but let's just assume for a moment that we bottomed. That's what I'm driving at. Regardless of how the fuck we get down here, we can figure that out. Let's just assume we top down here. We topped. I'm hanging upside down. We bottomed down here. Okay, brain starting to melt in the heat of my office. I think it is so hot in here. Right, so 1 A, B, 1, 2, 3, 4, 5, C into a 2. It's hideous beyond words. It doesn't seem to make any much sense. 1, 2, 3, 4, 5, but we're just going to say it anyway. But you want a bullish interpretation, this is the best I can do. We go up in a 1, we get an expanding, running flat in a 2, 1, A, B, C, 2. W, X, Y may be possible, but it's expanding B, so we should always look for an ABC first, running or expanding flat pattern. So A, B, C, 2. I'm not going to label this because okay, hang on. Tell you what I'll do just to keep things. There we go. That'll do. WXY into a B, some kind of crap that I just can't be bothered to dig through at the moment, or have tried and just can't really make work. So 1 A, B, C, 2. Now we're in a 3, and here thankfully things clear up considerably. Alright, because now we get a 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. 3, 4, 5 to come. And this should all just be a 1. So this is suggesting that the yields on the longer end of the curve are actually going to start going down again, and bond prices are going to rally. Seems absurd given the circumstances, but then again, who knows? We just don't know, do we? I mean, I've got counts on the equities market which suggest that we're going to top out later this year. I've got a primary 3 coming in sometime in the summer, July, August, you know, before the end of the summer. And then that brings us into a 4, which could drag us out into the end of the year. The 5 could take us into 2022 Q1. So, you know, with that still being relatively very close potentially to the top of the market, we wouldn't have expected to bottom here in bond prices, really, given the fundamentals. But like I said, it's one of the reasons why I just don't discuss them. I've done it for years and years and years, and you just go around in circles. And at the moment, even the greatest minds out there at the moment are arguing inflation and deflation, counter arguments against one another, and they're all valid. So until something definitive happens, and in my book, from a fundamental argument, the definitive argument has to be runaway inflation. So it starts and it doesn't stop, or it started and it just doesn't stop. It keeps getting worse, which is unlikely considering year-over-year targets should start getting cancelled out by the fact that this time last year the economy was reopening, so those inflation figures should, in theory, start cooling off. But runaway inflation, or the opposite, a big deflationary crash beginning. So we'll have to wait and see. Alright then, so that's the Elliott wave count I've got for you. I'm still struggling here with TLT to make sense of this. This is the bullish interpretation. We're just going to start going higher. Looking for the completion of the wave 1 on intermediate degree. 2, 3, 4, 5. You could even say this is a wave 1 and this is an extension. Doesn't look like an extension in the 3 though, so I'm going to say we're just building a first intermediate wave as a guess at the wave degree. Okay, and if the other count is correct, we should break down. Alright then, let's do some basic technical analysis, as I've been waffling on for a good 24 minutes apparently, so let's really get through this section now. We're going to use these two charts for our... Actually, let's just use this one since it's right next to it. Weekly time frame. Bring up our indicators. And this is TLT on the weekly time frame. So let's bring up our moving averages. 10 in yellow, 20 in blue, 60 in orange, 250 in green. Okay, we've got our MACD with a 10 for the short-term moving average in blue, 20 for the long-term moving average in orange, and a 9 to smooth. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. So here on the weekly time frame on TLT, we can see we are now trading above the 60 exponential moving average on the weekly, having crossed back above the 10, back above the 20, now back above the 60, which has proven resistance. We even got this little, maybe you could argue it's an evening star here, but we got no follow through, no sell off, so potentially likely just a correction before heading higher. Looking at this, bullish activity on the MACD with the short-term moving average having gone well below the zero bound, crossed back over the long term to get that buy signal here, and now we've had bright green bars from a histogram increasing in size, back above the zero bound with the signal here at 0, yet to drag the average back above the zero bound. So we'd want to see that bullish, if the bullish count is correct, and this is a 1, 2, and we're into a 3, we'd want to see this bullish momentum continue until we find that peak of that 1. Then we would expect to see a reversal. Okay, on the RSI we came all the way down to oversold conditions here at 14 on the RSI. We've since moved in what looks like a 1, 2, 3, 4, 5 wave swing so far. So it could be approaching that high. We have that 1, 2, 3, 4. So it depends whether or not this was an extension. We bottomed out around the point of control on our visible range here on the volume profile, which is the yellow dashed line. Also tagging the 250 weekly exponential moving average, moving below it, moving above it, moving below it, and back above it definitively, with a little test of the weekly candle here with the wick below it on the week of the 1st of June. Yeah, so looking stronger, actually, looking like it could have bottomed, looking pretty convincing here, which is one of the things which has been confusing. So we are going to start tracking that bullish count from here on out, and if it starts to make more sense with the subdivision over the coming weeks, it may become the primary count. On the day time frame, let's come down and take a look. Now, on the daily, we can see we are back above the 250 exponential moving average on the daily. It looked like a long way away not too long ago. We've had the bullish bounce off of it with a hammer here this week, down with the wick of the candle, bounce back up with the body of the candle at the top of the closing at the top of the candle. I say closing, it is Friday now, we've got a whole day's trading, so anything could happen, but we could even extend this bullish move. We'll have to wait and see. MACD now trending above the zero bound. No sign of fading or faltering yet. We've had some back and forth wiggle here. RSI, we still have a low and a higher low, a high and a higher high in the RSI, so we're still trending up at the moment with no negative divergences building up in recent price action. So no bearish divergence at the top here of this move yet. Back above a major moving average, it is looking more bullish. Alright, let's do the same with oil now. Let's bring up our indicators, and let's bring up our moving averages. Bring up our volume profile here as well, see if there's anything to tell us anything. Come out to the weekly. Okay, so in our new cyclical bull market, having reset the market at 0, we, having flushed below the 250, 60, 10 and 20, found our low at 0 and then came back above the 10, above the 20, above the 60 and above the 250, with the 60 exponential moving average golden crossing over the long-term 250 on the weekly, with price action above it in an impulsive move that we've counted. So this is a confirmation golden cross. Now I don't tend to put too much, as I've said before, emphasis on golden crosses and death crosses. They may confirm longer trend changes, but they also have a habit in the shorter term of often confirming lows, significant lows and significant highs. It's often when you get a major death cross that you're very close to the bottom of a major move, and it's often when you get a golden cross that you're often very close to the top of a major move. So just considering that for the moment, while I have a quick sip of my coffee, we can see that we have that golden cross on a weekly time frame, but it is accompanied by bearish divergence in the MACD between the high of the week of the 8th of March and the current high of the 5th of July. We also have the same in the RSI on the first week of the 1st of March and the week of the 28th of June. So high, lower high, high, lower high, high, higher high. So is this golden cross, although confirming long-term cyclical bullish move higher, actually signaling in the short term a top? You know, our own count is calling for a potential top very close. It could, like I said, this could be a broader zigzag and a 4. We could even witness a bigger sell-off and maybe have to put the 5 up here where we are and reconsider how we've counted this. But I still have confidence that we can push higher in the weeks to come. Perhaps this is signaling a short-term correction, or this divergence simply disappears in the coming weeks. We will wait and see, but should be on guard because we do have a bearish count, remember. We do have a bearish count. This is the 1.618 and this is an A, this is a B and this is a C that's going to come down below the A. Now that, given the bearish divergence on the weekly time frame, golden cross potentially signaling a top, that could be, well, we wouldn't be considering it if it couldn't be a possibility. So we do have to be on guard for that and see if this breaks down more violently. We'll check these moving averages again in the following weeks. Still holding at the 10, above the 20, 60 and 250 obviously. Pointed out the divergences, coming off of overbought conditions. Let's come down to the daily time frame. So below the 10, below the 20, above the 60, above the 250, bearish activity building up here between these divergences. High, lower high, high, higher high. Shorter term moving average down and accelerating away, the signal below the average, with the red bars on the histogram getting brighter and bigger, increasing selling coming in, increasing bearish momentum. This could start bottoming out, we go higher, or this could accelerate. We will have to wait and see how the week closes. RSI is still between no oversold condition here between these two peaks, highs and highs, highs and lower highs. It's a neutral territory. Still significant way off of oversold, which we haven't seen since that initial move back into the completion of primary 1, A, B, C, into the 2. We got the bullish divergence between the low and the lower low and the low and the higher low. This is the A wave here in the RSI, this is the B, this is the C, this is the divergence, the completion of the 1, 2 before moving up. If we're going to do the same on the 3, 4, then the bearish count would more likely fit it, because we would have that flush down to here, and then we would set a 1, 2 with a higher low and then get moving again. So all to keep looking at. So we're going to call it there, guys. If you like what you've seen and you're new to the channel, please subscribe, smash the like, leave us a comment in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. Thank you as always to my patrons. Your support is greatly appreciated. I'll be getting an exclusive video out to you probably this weekend for the week. Been a little bit late doing it. Thank you for your patience. If you're interested in becoming a patron, follow the link in the description below. Have a read of the tier, see if there's anything you like, and feel free to sign up. Also, if you're not following me on Twitter yet, there's a link to my Twitter feed also in the description box below as well. Alright guys, thank you very much, and I will be back with you later. Take care. Bye bye.